What is up, everybody? Welcome to the Supercycle Report. I am Sam Gatlin, joined as always by my very esteemed colleague and co-host, Mr. Jason Perz. I just got back from a run. How far did you run today, Jason?
I am still around the 1 to 2 mile range, and so like hitting about two at this point, which is pretty good for me. A couple six knee surgeries, and I haven't never ran distance much ever since. So I'm getting back there. It ain't much, but I'm working on it, Sam. I'll get up to your level.
There you go. Did you see the news over the weekend about, I think it was this last weekend, like the 2 hour marathon?
I did see that, yeah.
I just wondered to myself, like, how in the world is that possible? Like
Mhm.
2 hours to run a marathon.
It's pretty amazing. I
That's
mean,
amazing.
yeah.
Seriously. We've got some action here in the YouTube chat already. I know there's some people out there that watch this on Twitter, but if you want to pop on over to the YouTube stream, you can chat with Jason and I. We'll try to save some time at the end of today's show for some questions. So let us know what's on your mind. Brad S says, nice move in the UAMY today. Yes, Supercycle Report members got that trade alert before that move. So shout out to you if you took that trade and you are a member of the Supercycle Report community. And yeah, we've got a lot to discuss today, Jason. We titled today's episode Surviving the Dollar Collapse. And, there's a lot of people out there that will suffer from a dollar collapse, but we are here to identify ways to benefit from that, and there are a lot of ways. So Jean Gauthier, behind the scenes, if you will throw up slide number 2, I think this really sets the stage, Jason. DBC, the commodity ETF, is breaking out above a really well-defined multi-decade trend line and making new highs. And yes, this is a lot of energy, but it's not just energy, it's the entire commodity class that is working its way higher. And energy certainly is a big part of that. Right now we are watching the December contract for energy. That is what Jason is trading actively, or I guess not actively, it's what you own. But
I own,
December
yeah.
crude oil making new all-time highs. Heating oil, the December contract, new all-time highs, up more than 50% since the December low. December gasoline futures also making new all-time highs. So you're seeing strength across the board in the energy complex. And as you know, energy is, the biggest commodity market out there. It's a huge deal. It goes into so many different things, and it's, not just affecting, the prices of, plastics, but it's also making a big impact on the grain markets and all kinds of things out there.
Hey
And
Sam, real fast, go back
yeah,
to the crude oil futures or any of those futures that you just had up. Those are great.
for
Uh,
sure.
just wanted to also add the fact of why we look at the futures market. Like one, I trade it. I'm a futures trader, so I'm always trading the futures market. I'm always in the futures market. That's what I primarily trade. But we also look at the futures market to get an understanding of the future, what's going on in the price. Now, you guys heard me talk about the December contract, going back a couple months ago now, and how that's been showing the relative strength. And that's the area where we would like to be, because most of the time when you see that type of a move, technically, it mainly says the rest of the curve is going to follow it, meaning the front month contract currently that's in May. So May 2025 is the front month contract. We're talking about December, or sorry, 26. We're talking about December 26 currently. So December is showing us that. And most of the time, what I always say is look at the technicals. If the technicals are moving the right direction in that specific contract, most of the time that market is going to move that direction as well. So as you see the curve in backwardation, meaning we're in some sort of supply and demand issue in that market, which anybody with two brain cells can look and see, okay, the Iran situation, all these things, the shipping situation, and so on is telling us that there's these supply and demand issues. Then we want to be in the area that's going to benefit the most from that, which is crude oil. which is gasoline, which is heating oil. So this is why we're always talking about the futures market. This is why we kind of bring it up from time to time, because it is going to tell you what's going to be making money, what's going to continue to make money in this market.
For sure, Jason. I'm on the August crude oil futures. We were talking about that the other day, and um, I think the chart kind of looks better in August, Jason. Speaking of technicals.
I don't know if it looks better, but I will say this. Here's the thing about it that you want to do as a futures trader. You want to always understand your time frame. So number one, there is not a wrong way to do it. People do not have to be in the December contract to make the most money. The front month contract most of the time is going to have the most volatility. So that's up and down. It can make the most money. It can lose the most money. If you're making a bullish bet and you're actually very bullish on it, most of the time that earlier contract is going to make the most. Me and my time frame trading, on that 6 month to 1 year time frame, most of the time, I'm going to be a little bit further out than someone like Sam. So there's no wrong way to do it, but the right way is to not be in that direct front month contract, because a lot of risk can happen in that direct front month contract, meaning go back to 2020. And if you were in the, let's say you were long oil at that point, which you shouldn't have been, but let's say you're long oil in April 2020, and let's say you're in the April contract at that point, you got slammed. That went down negative. That went all the way to negative $50. If you were in the August contract, similar to Sam, you actually would have been just fine. It barely went down that day, and then a couple days later, that basically bottom went up and never looked back. So once again, I don't like trading those front month contracts in a lot of things, especially commodities. So that's just a warning to be careful. But no, I agree, Sam. It's a good spot to be. I think we're both in good spots based on our general time frames.
Totally, Jason. And another interesting way to play it is with the Canadian dollars. So I was actually on Chart Request Live earlier this week, right here on Stock Market TV, and I think it was Builder 1995. Shout out to you if you're out there. Tipped me and Dan 10 loonies. So I am now a holder of the loonie, and I'm looking to put on more exposure to the Canadian dollar because, and historically, it has moved very, very close to energy. And energy, as you know, we just walked through the futures making new all-time highs. The stocks are a nose hair away from new all-time highs, reclaiming the all-time high volume weighted average price. So the buyers are in complete control of energy, and I think it's just a matter of time before the Canadian dollar also catches a nice bid. So that certainly has my attention right now. And that's one way to take advantage of the collapsing dollar. And, Jason, I shared this chart on my Twitter, I think it was yesterday, and got some interesting feedback. Somebody said, I'm just completely ignorant and don't know what I'm talking about, and that alone is funny in itself. But they were talking about how this new Warsh guy is going to redefine inflation, and they cited the 2010s era where interest rates were very, very low and we didn't have much inflation, but today, we are in a very different environment. It could not be more different than that deflationary environment we saw in the 2010s. And, it's been very clear that's been the situation since 2020. Inflation is here to stay, and the bond market is making that abundantly clear to us with this key intermarket ratio. This is Treasury inflation protected securities, TIPS, relative to nominal treasuries. So this gives you a sense of the bond market's expectations for future inflation. And right now it's making new multi-year highs, but I don't think that's the complete story, Jason, because when you zoom out on this ratio, you can see a massive base that goes back to the great financial crisis, a really well-defined level of former resistance, and you're just now pressing up against that. So I think inflation is, it's making new multi-year highs, and I think it could get a hell of a lot worse. We saw what 9-10% inflation back in 2022. I think we could easily eclipse that here over the coming quarters with energy moving the way it is. It's a huge component of inflation. It doesn't really matter how a Kevin Warsh calculates inflation. You and I have a sense of inflation when we go to the gas station, when we go to the grocery store, all kinds of things like that. You don't need a fancy MIT educated economist to tell you what inflation is. It's just use your eyes. You can see inflation is rising, and it's rising rapidly. You are muted, Mr. Perz. Is this your first time?
It's my first time. Sorry, first day, guys. But no, man, you're completely wrong, Sam. The government CPI reports tells me everything I need to know. And if I really get really upset, I just go to the Trueflation website. Guys, for God's sake, stop doing that. Like it's like Sam said, continue to look at the actual prices, continue to have eyeballs, continue to be in the real world. Like if you're looking at
You don't need to be a genius, Jason. I guess is my point. Like,
yes, you
don't
don't need to be,
overthink it.
you don't overthink it. Just literally look at, these ratios, look at the actual futures market. Like how do you really gauge inflation? Well, it's as simple as look at the actual prices of things in the commodities market. Look at the actual prices of your phone. Look at the actual prices of your computer. Like, have they gone up? Have they gone down? If you can get an understanding of all these things, it'll help you. It's the reason why last year Sam and I were like talking about at the end of the year, yeah, oil's probably going to make a move. And everybody's like, well, there's no inflation. I don't know what you're talking about. That doesn't make any
They
sense.
kept telling me about a supply glut or
Yeah, there's
whatever
all
a
the supply in
glut
the
is.
world, and then we don't need oil anymore because we're on solar now and all this stuff. And it's all like, guys, simply understand, like we can't really replace the edifices that we put on oil ever. Like it will probably never go away. I know everybody thinks we can get completely off oil. I would be surprised. Even your electric cars need a lot of oil. Your electric cars need a lot of coal. So once again, like the cycle just works the way it does, and then inflation's going to go with it, and just ride it as it comes. It doesn't mean like, hey, we're talking about inflation, go buy all these energy stocks, in the beginning of 2025. It means be ready for this. Inflation is here. It's probably not going anywhere. Be ready to buy those energy stocks. And we were absolutely right about that. It was time to buy those at some point. It did make a lot of money for us. And we continue to find that alpha in many different areas, whether it's internationally, domestically, in different sectors inside of the commodities market. Like there's a lot of alpha there, and that's where that outperformance is. And that's how you protect yourself and your family from a dollar collapse, is get an understanding of how to position yourself in a way that's going to make money, even if there's high inflation.
100%, Jason. And it's not just energy stocks that are a way to take advantage of rising inflation and a collapsing dollar, but metals and mining are also a great way to do that. So I was just showing that ratio of the bond market inflation expectations, that's TIP over IEF, making new multi-year highs. And historically, the metals and mining industry has moved in lockstep with that ratio. And, you've seen tremendous moves in the metals and mining industry, especially under the surface. As who was that? Brad, I think that was Brad at the top of today's chat, cited the trade we put on earlier this week for Supercycle Report members, up almost 20% today. You're seeing huge moves in these metals and mining areas. And, it's particularly exaggerated in the base and industrial metals as well as the rare earths, not so much the precious metals. I saw Wavy McFly wanted to get the the Peter Schiff on the show. I'm not sure about that one. Maybe if we see new all-time highs in the the gold, we'll do that. Maybe not today though.
I would reach out to Schiff. I think that could be a funny one. I have run into him before. I could reach out. We'll see what happens. I know you guys would like to see it. I don't know if me and Sam have much to really talk to him about, but I think you guys would like to see it. I'll see if that's a possibility. But any other gold guys that you guys can think of, any other guys that you guys want us to bring on, feel free to reach out. Let me know. You guys have my Twitter. Go ahead and DM me. I'll try to reach out to a couple people. I'd like to bring on some people soon. By the way, one thing I do want to say for everybody who keeps asking, Sam and I have been busy doing a lot of new stuff, as you guys have seen, but I do still want to get Mish on here to talk to her about the bond trade, especially currently. So I did reach out to Mish. We're going to get that together. So we will see you guys soon. So just so you guys know, I am on it. I
I
keep
think
getting
that would be
asked about
very
it.
timely, Jason, because bonds look ready to move.
Mish
So
has the opposite trade, and also, guys, stop trying to pit me against Mish. Mish is like my mentor. She was one of the best people I've ever met, sweetest people. Love her to death. Do not agree with her bond trade, but that doesn't mean that
is
she's
she a
not
bond
good at it.
bull,
She's
Jason?
a bond bull. Yeah,
Wow.
she's
Okay.
bullish. Yeah, that's hard for me to put to feel because I'm like, me and Mish are usually on the same page on a lot of things, but she's a bull, and so I want to bring her on to understand why she's bullish. But I'm definitely bearish, and she could say anything and ain't gonna shake me.
For sure. It seems like the market's bearish too, Jason. I think it's interesting to note that the TLT, the 20 plus year Treasury bond ETF, has just been coiling below the volume weighted average price anchored to the low of this prior downtrend in late, I believe that was 2023. And our guy Ricardo pointed out the T bond volatility index, VXTLT. I honestly didn't know this existed, but thank God I found this because this is wonderful context for this chart, the TLT, which has just been dead money for years now, just straight sideways. But you can really see how dead the volatility is when you look at something like the VXTLT, lowest level since 2019. And you know what happened after 2019. You had one of the biggest moves in the bond market in recent history. So I think the stage is set for a big move in the bonds. And, with the price well below the volume weighted average price anchored to that low I mentioned earlier from 2023, I think the bias has to be lower. And that's why Jason and I and our super cycle community are long the TLT puts. And
We're short, man. We're gonna be short the bond market for a long time. I am short. Like people keep asking, like, "Oh, why don't you get bigger on that bond short?" It's like, guys, I'm short. We go to JGBs, we go to Germany, wherever we're at. I'm short the bond market pretty heavily. The US is really the last one to start moving, and so we'll see. And so those futures traders out there, there's some great trades coming up, especially for you guys who like spread trades, and this chart kind of shows that perfectly, which is the idea that you could be long the shortest part of the yield curve, because this is the thing you guys have to understand is that the Fed controls the short end of the curve. It doesn't control the long end. So as it controls the short end of the curve, sometimes the curve starts to spread out. That's usually when the curve is the 30-year is saying, hey, there's inflation, there's something going on here under the surface, and the Fed is artificially suppressing rates on the short end of the curve, which means you can go long the short end of the curve, meaning the Fed rate, basically futures, LIBOR futures now. So you can basically be long that area and be short the 30-year and basically make the middle of that trade. So you can make a lot of money. That's kind of basically the bull spread trade. So if you have the bull spread trade on, there's a lot of money to be made. However, if you're just trading the futures or you're trading it, using put options, I'd just be short this thing across the board. It's coming. It's going to be big. We buy put options a little bit earlier than we wait for a breakout. But, if you're just shorting the actual TLT, wait for it to break down. If you're buying put options, something like that, the time is now.
And you were mentioning bond spreads there, Jason, and the twos tens curve continues to support this bearish bond thesis that we have, as well as the bearish dollar thesis. So, talk to us about the significance of new multi-year highs in the twos tens.
Yeah, I just think that when you get an understanding of the yield curve, you really understand the market much better than most people. And this is something that's very important, which is just understanding the long-term catalysts that are coming your way. One catalyst that this is showing us is that the dollar is going to continue to get weaker. As you see in the red lines where it says money supply tightening, that is when we are in a bear flattener. So a bear flattener is where the curve is in a downtrend moving lower, meaning money is getting tighter, meaning less supply of dollars out there in the world. As that is happening, that is basically creating a stronger dollar environment. You get the opposite scenario where you're in a bull steepener, which we're currently in, where that line is actually moving the other direction. And that means there's more liquidity coming into the market. So as we have more liquidity coming in, that's going to put pressure on the dollar because there is more dollars in circulation. So as banks are lending out more money, as the Fed is actually printing more money, or whatever you want to call it, people get upset about printing because we don't do that these days. I get it. Whatever you want to say, there's more dollars in circulation. So as there's more dollars in circulation, the dollar will continue to get weaker. So I think we're in an environment here where the dollar is just going to continue to go lower, which means you really want to get an understanding of these commodity-based stocks. It's what we do here primarily at the Supercycle, and just kind of continue to rotate from one thing to another, because that's where the money's going to be made. That's where the outperformance is going to be made, and that's how you're going to protect your portfolio better than most people. And a lot of people forget we've had lost decades. Like, people always are like, well, if you buy the S&P 500, it always goes up. It feels like that. However, there's been plenty of lost decades and lost time in the market, meaning, 1929 all the way, almost 50s. So that was a long time. And then you have also 68 all the way till 82. That was another lost period of time where the market didn't go anywhere. So once again, you want to figure out these different areas where you want to be in the market, and especially in a weak dollar environment, because people haven't traded it in a very long time. We've basically been in a strong dollar environment since 2008. So, you got to get an understanding of how to do that. We do that here. We have a lot of historical research. Not to mention, I've traded through many different periods in the market. So we'll see where we end up. But I think, Sam, you and I are the best people at that. I think we do a great job of really understanding where we want to be positioned and how to ride different cycles in the market.
100%, Jason. We are here to share our best trade ideas with the super cycle community. And right now, I don't think there are many opportunities that are better than agriculture, Jason. We've been talking about this coil for quite some time now, but, it seems ready to run, and we're seeing some huge moves underneath the surface. This kind of masks the strength that we're seeing in agriculture, this fund, because it's, overweight some things that are not performing near as well as some other products. But I think it's also really interesting to note that at the same time, the grains are moving significantly higher. We're seeing new all-time highs for the livestock index that we have here, which is an equal weight basket of live cattle, feeder cattle, and lean hogs. So new all-time highs. And, when we hit new all-time highs in cattle, Jason, I go to the cattle auction, what else am I supposed to do as a Kansas boy? Also, wasn't just the cattle auction. The cattle auction has the best breakfast in town. So I went and smashed an omelet and some coffee, and then went and watched, the cowboys wrestle over some cattle. So, it seems like the appetite out there is very strong for putting new risk on and buying new cattle. And, my cousin was there. He's aggressively buying cattle right now with these new all-time highs. And, it's a great way to hedge also the grains. So this is certainly a bull market for cattle, and that was evident at the cattle auction this morning. And we were talking earlier about grains. So Jason, this is something we've been talking about for quite some time now. So grains as a asset class, whether it's the soybean complex, corn, wheat, rough rice, pick your poison. When you put them all together in an equal weight index, it just went through a brutal multi-year downtrend, and it's gone through several years of just churning sideways. And now, just now, it is turning that corner and entering a brand new primary uptrend. So the grains look fantastic. And, at the top of my list right now, Jason, is the soybean complex, which is making new multi-year highs. But corn is also setting up very nicely, beautiful bottoming formation, and you're hitting new highs as we speak there. Soybeans making new multi-year highs, almost a decade high relative to the broader grain complex. You're seeing participation in the non-fat milk futures as well, hitting the highest level since 2014. So it's not just the cattle, but the product from the cattle, the milk cows in particular, highest level in over a decade. And I wanted to finish with the rapeseed, Jason, the canola right here, making new multi-year highs. Is the canola something you trade, Jason? Is that liquid enough?
I do trade canola, so I'm in canola. I do trade the rapeseed. You can trade it all. It's just and Canada. So canola. Here's the other thing that's hard about canola. If you do not want to get on the list, and if I don't know if Jonathan's in here, but Jonathan would know this as well. If you do not want to get on the list of being an LTR, meaning large trader rule, meaning then you have to like basically give all of your reports to the government all the time. Do not trade canola. It is basically like a
You're like
few.
a canola whale.
Yeah, you're a canola whale pretty easily. Like you're talking like, $200,000 of leverage in canola, and you're a canola whale, and you have to like basically start to put that out every single month to the government. So just a lesson I learned the hard way. Just stay out of it until you're at the point where you're like, I have to do it no matter what. Because I had to do it like pretty early on, and I was like, come on. But at the same time, it's soybean oil is another one that you can trade that's very similar. But I think there's a lot of alpha in the canola futures. But at the same time, the LTR rule isn't that big of a deal. It just scared the crap out of me at first because it was like the first thing that the government ever was like, we need your information right now. And I was like, oh my God, what did I do wrong? They're like, nothing. It's just canola's very small contracts will get you there. So something to keep in mind for you traders out there, an actual trading thing that happened. But yeah,
Totally. And I think the bigger point here, Jason, is it's less about the vehicle that you choose and more so just you're seeing broad participation in the grains. And that's something we haven't seen in a long time. And I think that just further reiterates that grains as an asset class are entering a brand new primary uptrend. And that's going to create a lot of opportunities, not just in the futures market, but also in the stock market. There are a lot of stocks that benefit from rising grain prices. So we will be giving our best trade ideas to our Supercycle Report members. And if you want to get access to those trade ideas, you should consider joining our growing community today. You can get a 1-year membership for $14.95 or a 3-year membership. This is really the best value for $39.95. And you can go to allstarcharts.com/get supercycle or click the link in the description here on YouTube. And what you'll get as a member of the Supercycle Report is the Supercycle Portfolio. This is 8 to 12 high conviction commodity stocks with 6 to 18-month hold periods. And as we talked about earlier, we put on some rare earth exposure earlier this week, and that has been working out very well for us so far. Members also get the Bonanza Stocks Watchlist, which is 30 to 50 names inside of our entire universe, which is, I think, about 400 stocks last time I checked. And these are the strongest names. These are the ones that we're likely to trade next. And, if you want to trade these names yourself, you always have this Bonanza Stocks Watchlist of the hottest commodity stocks out there, the ones that can multiply your money many times over. You'll also get 1 to 2 options trades per month. These are, typically with longer time frames, like we talked about our TLT puts that we own. We went out, I believe, about 8 months to express that bearish thesis on bonds. So we give these trades plenty of time, and we are just trying to catch the meat of the move, the big trends. And that's really how you get those 10 to 20x returns. And then finally, you get weekly live calls with Jason and myself every Monday at 2 p.m. Eastern time. This is where we talk about the current portfolio, talk about the trades we're looking to put on, and everything education wise as well. So if you have any questions, we are happy to go into further detail during these Monday calls, as Jason and I both love to educate our members. It brings us a lot of joy. Multiplying our money is cool, but it's also cool to educate our members and help you learn how to do this on your own and protect yourself from rising inflation, protect your family from that. And as we talked about earlier, cattle prices are hitting new all-time highs. So, that Friday night ribeye with the whiskey is going to get more expensive here. And I don't think that's going to change anytime soon. So if this sounds like something you are interested in, please don't hesitate to learn more about it at allstarcharts.com/get supercycle or click the link in the YouTube description. I want to thank everybody for being here. Brad S, SM Traz. We've got Ross in the house. A full house today in the YouTube chat. Thank you all for being here and chiming in and making this an awesome experience. So we will catch you next Thursday right here on Stock Market TV for another episode of the Supercycle Report with myself, Sam Gatlin, and Jason Perz signing off for the day.
And yeah, guys, if you guys also would do us a favor and share this to anybody who, you know, there's a lot of people out there who are in this situation where they have no idea what to do with their finances, no idea what to do with their money when you're in an inflationary environment, because for the last 40, 50 years, basically, the idea has been to own stocks and bonds. Now the stock market is very concentrated in things that are not inflationary, that will not do well in inflationary cycles. And also bonds do terrible in inflationary cycles. So where do you go? What do you do? We have a lot of answers here. So if you guys do know anybody that you can share this with, please do. But either way, hit that thumbs up, subscribe to the channel, and we'll see you guys next week.
Peace out, everyone.